Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Friday. In a bid to curb accelerating inflation, the Banco Central finally pulls the trigger on a rate hike.
Banks' non-performing loan ratio eases to a 3-month low. That's thanks to the further reopening of the economy.
The Agriculture Department pushes for an additional yearly budget as it warns of a looming food crisis.
And NEDA pitches the continuation of the rice tariffication law to the incoming administration, saying this will help farmers and consumers alike. We begin our broadcast with the Banco Central raising its key interest rate for the first time since 2018 to fight rising inflation.
Now, by increasing borrowing costs, the BSP seeks to temper consumer demand to tame a spike in prices. As expected by a number of economists and analysts, the Monetary Board increased the benchmark rate by 25 basis points to 2.25%. Interest rates on the overnight deposit and lending facilities were also hiked by 25 basis points. The central bank's rates serve as benchmark for loans, credit card, and deposit rates for banks and lending firms, and higher rates mean it will cost more to borrow. Oftentimes, higher rates prompt consumers as well as businesses to spend less and save more money, and in the process, this tempers demand and helps tame inflation. BSP Governor Ben Jocno says persistent inflationary pressures were the key reason for the rate hike.
In deciding to raise the policy interest rate, the Monetary Board noted that the latest baseline forecasts have further shifted higher since the previous monetary policy meeting in March, indicating that elevated inflation pressures could persist over the policy horizon. Average inflation is likely to breach the upper end of the 2 to 4% target range in 2022 at 4.6%, while the forecast for 2023 has edged closer to the upper end of the target band at 3.9%.
Now recall that inflation soared to 4.9% in April. That's the highest level in more than 3 years. This is on the back of soaring oil and commodity prices due to the war in the Ukraine and ongoing disruptions in the global supply chain. The central bank now expects to buy crude prices to average at about $100 per barrel this year, higher than its initial estimate of $83 a barrel. With this, the Banco Central has raised its inflation forecast to 4.6% for 2022. That's from a previous forecast of 4.3%. This exceeds the government's target band of 2 to 4% for this year.
The Monetary Board also observed the emergence of second-round effects, including the higher than expected adjustment in minimum wages in some regions. Inflation expectations have likewise risen, highlighting the risk posed by sustained pressures on future wages and price outcomes. Given these considerations, the Monetary Board believes that a timely increase in the BSP's policy interest rate will help arrest further second-round effects and temper the build-up in inflation expectations.
Now, banks' non-performing loan ratio dropped to its lowest in 3 months as economic activity increased further with the easing of restrictions. BSP data showed that the banking industry's gross NPL ratio slipped to 4% in March. That's from 4.2% a year ago. It is also the lowest since the 4.1% logged in December. Bad loans may have increased by 2.7% year-on-year to 460 billion pesos in March. But this is a 2.6% decline from the 472 billion peso soured loans recorded in February. Okay, first in 3 years, but how much more do we see the central bank tightening rates, and how much more can the economy absorb? Time to get insights from Carlos Sunchon, Chief Economist over at Union Bank. Good morning, Carlo. Thank you for joining us.
Good morning, and thank you for inviting me.
Okay, now Should we be expecting further normalization here from the BSP, and by how much more do you see the BSP hiking rates, and does the economy have enough room to cushion higher interest rates?
Well, from our time series analysis from April's 4.9%, we are actually seeing inflation to peak at 5.7% this June.
Wow.
So if you're going to look at that, definitely with the goal of BSP of anchoring inflation expectations, there might probably be another rate hike this June at 25 basis points. So, and we're actually expecting 4.7% for the average for 2022. So that's basically beyond the 2 to 4% of the BSP's target.
Okay, Carlo, is this, just because of the inflation issue of, which is oil related, which is supply related, or is this also just the reopening of the economy and us needing to go back to the rates that we had pre-COVID? So we went down by 200 basis points, so 175 bips pa to go up if we are to go back to the pre-COVID levels, or is this just, something related to the hopefully temporary impact of the prices of oil?
Yeah, well, we were looking at that when the first quarter GDP print came out, and we were discussing about where did this hotter than expected GDP print came from. So we were looking at pent-up demand, and of course, basically, as the government has mentioned, it's basically consumption. And we were looking at the idea of maybe it's really something a growing demand that's there also that has sort of intertwined with this pent-up demand, because simply people are going out and there's stuff that they might not be doing, like for example traveling, going to, for example, Boracay. You won't, most probably for others they will, but not for all. Go to Boracay once. This summer that's done, and then probably do it again maybe December if circumstances allow. But there's pent-up demand, and pent-up demand will not exist forever. So definitely we saw that there's something there besides the pent-up demand that we're seeing.
Now, Carlo, earlier you mentioned 25 basis points pa by June. At least that part is clear. But how much more do you see them raising rates in totality for 2022 and even up to 2023?
Yeah, well, I want to go back to what Governor Diokno has mentioned about again going back to data. But if you look at their expectations about 4.6 for this year average. It's about our own expectation, ours 4.7, and then 2023 3.9. So the 25 basis points for us probably is very short, but definitely they're going to stay data dependent, as they mentioned, and but they won't deny that the momentum is there. It's not going to be overnight that it's going to go down. Of course, as we know from experience, of course you have to see if I think second round effects are entrenched, and you make sure that these things are controlled. And then at the same time you are protecting the recovery or economic growth per se.
Carlo, is this above 8% print for GDP in the first quarter sustainable? Does that now show you a trend of, especially since, the IMF downgraded global outlook except for the Philippines, and then, like you mentioned, baka the effect of the inflation might be lagged pa in terms of consumer spending in the second or third quarter?
Yeah, remember, we were around, I think, 12.1% or 12 for the second quarter GDP. That's very high. So you wouldn't get 12 again. No. So definitely, we are actually penciling in about 5 to 5.5%. So, and that also includes, as you mentioned, of course, the effects of inflation, and of course, what's been happening in China, what's been happening, of course, the geopolitical risks that are still there. No?
So to that end, is it okay to keep hiking rates if you do expect that the GDP growth will not be sustainable in the next few quarters?
Yeah, that's going to be, of course, a tricky decision to do. So you have to, well, that's their mandate, of course, to make sure that prices are stable and to protect GDP growth or economic growth. And they should have, of course, all hands on deck to make sure that they do their mandate well. No?
Okay, as early as now, Carlo, we're already seeing second round effects here. I mean, you have already wage adjustments in NCR and other regions here. What other spillovers here should we be looking out for?
But definitely, if I haven't heard of any jeepney prices hikes. No? But there's some requests, no? But I haven't confirmed any. Of course, a lot of the other impact on all this, not just on food per se and buying and all of these things, no? But of course, but definitely all the basic ones that you see, particularly on transport. So.
Carlo, on the wage hikes, are you in favor of that? Because there's been two camps there, but the MSMEs mismo are saying it's too early to be having this, especially since they're just recovering. But of course, you need people to have money in their pockets
to spend. How do you make
spend.
that balance?
What's the net effect? The net effect on the economy?
Yeah, that's why we are very mindful of the second quarter. The growth prospects because of those anecdotal reasons, the micro ones, the things that are actually happening on the ground. We know that with inflation, there is margin compression that is actually happening, and because firms have to fight for their markets, and protecting your market entails ikaw yung sasalot sa impact ng inflation, but it's going to be at a certain point lang, and then you have this pressure from raising wages, so it's going to be very difficult for firms, so let's acknowledge that, and definitely on a macro level there will be some impact moving forward.
Okay. Carlo, lastly, before we let you go, I want to pick up on one story here that we already headlined here. You have the Agriculture Department warning of a possible food crisis here for the second half of 2022. I mean, they're talking about tight supply here and rising costs, especially when it comes to feeds and fertilizers. How worrisome is that, and how is that going to somehow hinder growth?
Yeah, well, definitely, those are the things that we need to consider. We've been actually putting a red flag on that because all this time it's all just been food. The sources of our inflation have been food, and then I think that definitely, if moving forward, it would be unwise not to consider. Really taking a serious look of our food security situation. So, and I think that's one thing that needs to be dealt with moving forward, especially a new administration is coming up. So, but definitely their question of food crisis, that puts pressure again on inflation and of course definitely on growth.
All right. Well, the BSP again doing some heavy lifting here to fight inflation. Parate na lang sila.
Yung next administration.
All right. Thank you so much, Carlos Asuncion, Chief Economist of Union Bank. Now, a recent survey found that nearly 11 million Filipino families considered themselves poor as of April.
But this figure might soon rise, with the Agriculture Department again sounding the alarm over a looming food crisis. Shaila Francisco tells us more.
With 2 kids, Sarah tries to squeeze 10,000 pesos per month for her budget, along with her income from side jobs. Sarah said that 500 pesos a day is not enough with the rising prices in basic commodities.
Isi-set aside mo yung yung pangangailangan ninyo, yung kunwari may gusto ka, hindi na muna.
Just like Sarah, more Filipinos still consider themselves poor. In an SWS survey, the number of self-rated poor families rose to 10.9 million as of April this year. The survey also shows that the minimum monthly budget families need to not consider themselves poor went up from 12,000 pesos to 15,000 pesos. But the problem doesn't stop there.
The Agriculture Department warns of a looming food crisis by the second semester of this year. If this happens, the country could face supply tightness or shortages, which could lead to higher prices of commodities.
This is driven by higher fuel prices, the impact of the COVID-19 pandemic, and the ongoing tensions between Ukraine and Russia.
This perfect storm, because of the convergence of the COVID-19 pandemic, yung impacts niya, yung high petroleum prices, now the Ukraine war. As a result of that perfect storm, there is now the disruption of the global food supply chain. So, yan will impact to whether you are able to buy also globally.
However, DAR said that they are ready to handle the problem as the country still has enough food supply. The DA is asking for an additional 24 billion peso budget to help in their interventions like providing fertilizer subsidies. They are also hoping the National Food Authority will be given additional budget to increase their buffer stock of rice to 30 days from the current 7 days.
Humingi pa tayo sa apat na bagay. Is that fertilizer, additional fertilizer subsidy, 20 billion para sa buong taon additionally, 1 billion each for urban and peri-urban agriculture, yung local feeds formulation and production, that's 1 billion, aquaculture and fisheries, additionally 1 billion, and food mobilization.
But one group is blaming Agriculture Secretary William Dar for the food crisis.
Siya may kagagawan niyan. Ito nangyayari ito dahil pinaliit niya kulang ang suporta sa local agriculture.
Think Tank Ibon Foundation believes that increasing wages can help the public to deal with the looming crisis.
May dalawang bahaging food crisis eh. Una yung pagtaas ng presyo ng pagkain at yung kakulangan ng pambili na hindi sumapat yung pagtaas ng minimum wage sa pagtaas ng presyo ng bilihin.
However, the Labor Department has reservations on the proposal. Shaila Francisco, we are One News.
Now, despite facing lots of challenges this year, the Agriculture Department still sought innovations to make farming easier in the country.
For instance, the agency introduced the use of drones in the farming sector. Mobile journalist Yeda Pascual with a story.
From 3 hours to just 10 minutes, technology is set to take agriculture to greater heights as the Agriculture Department introduces drone farming.
This drone seed is operated just like a normal drone. Only difference is that it has an aerial seeding technology. DA said that this will help evenly distribute seeds and is more efficient. In fact, it slashes 2 to 3 hours of farming to just 7 to 10 minutes.
Sa halip po na nagsasabog tanim tayo, dry seeding po ang tawag nila, gagamit po tayo ng drone para po even po yung distribution at mabilis.
Aside from this, drones also lessen the cost of farming. Traditionally, 60 to 120 kilograms of seed would be needed per hectare. But using this method, farmers would only need 15 to 30 kilos. Drones do come with a hefty price of 1 million pesos apiece. With this, the DA Region 12 assured the farmers that they will provide the drones for free.
Ang importante po ay meron po silang ma-access. So we are planning na sa bawat major cluster ay meron po kaming may po-provide na drone.
As of now, drone farming has only been tried in Sultan Kudarat and North Cotabato.
As they say, if you ate today, thank a farmer. With these technological advancements, farmers can sure get a much-needed helping hand to boost their productivity.
Now pausing for a quick break, but coming right up after that, we'll check how our local bourse is doing this morning following that widely expected rate hike by the Banco Central.
More of that and other stories on Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
The central bank relented and pulled the trigger yesterday. Dan, how are those rate-sensitive industries doing?
Well, Jess, before I get to those industries, I want to take a step back and take a look at the global equity space here because, you know, this rate hike was announced minutes before the market closed and the index slid on the close yesterday. But that was really on the back also of many other things abroad. The U.S. had the worst one-day loss of the S&P 500 and the Dow Jones since June 2020. The regional indices had the biggest drop since 2020, and we actually weren't as bad as those. So you can see on my terminal here that, you know, some green spots are coming back. There is a wave of calm descending on global equities once more. But of course, China COVID woes, they may cut lending rates over there. That's according to a Bloomberg survey. This when the rest of the world has a lot of inflationary pressures. Now, on to your question, we seem to have gone back on track, not just because of, you know, the sell-off that we had seen amid the BSP's trigger pull, but also just on the back of calming global markets. And you can see the composite up by 0.9%, back above 6,700 levels. And take a look at that. Properties gaining back after, of course, this, slightly expected. It wasn't 100% expected, Jess. 13 out of 21 economists had predicted this. So properties were sold off ahead of that rate hike, and now they are back on track. So again, quick check on which ones are moving this morning. Before we, of course, end our broadcast, you can see Ayala Land, the biggest mover here, SM Prime as well. These are two of the biggest names that were sold off amid the expectations of a rate hike. But on the downside, you've still got a couple of property players, in particular Mega World, still bearing some losses here, together with Monde Nissan and URC, two of our biggest consumer stocks, Jess.
Credit rating agencies say they will keep a close eye on how the Marcos Jr. administration will manage the country's mounting debt in assessing the country's sovereign rating. Moody's says it's also concerned over debt affordability as it reflects a sovereign's fiscal flexibility. They add that any reversal of economic reforms would also be negative. Moody's last affirmed its Baa2 credit rating with a stable outlook for the Philippines in July last year. Meanwhile, S&P Global says any sustained deterioration in the government's fiscal and debt positions will put downward risk on ratings. For now, S&P says its stable outlook on the country's BBB+ rating assumes that the fiscal performance will improve on the back of the economy's recovery from the pandemic.
Now, the data urges the incoming administration to continue implementing the rice tarification law and use it as a model for other agriculture reforms. Socioeconomic Planning Secretary Carl Kendrick Chua touted the RTL as the best model that can help both farmers and consumers. He added that the law benefits 2 million farmers, 110 million consumers, and thousands of retailers, wholesalers, millers, and those in the warehousing and transport business.
And the incoming House leadership will push for a new stimulus measure in the 19th Congress, and this will be called BBM Bill, as in Bayan Bangon Muli Bill. House Majority Leader Martin Romualdez says the proposed measure will seek to ensure the economy's recovery from the pandemic. Romualdez, who has received numerous endorsements to become the next speaker, says the 19th Congress will prioritize the passage of the stimulus package. Recall that the 18th Congress passed Bayanihan stimulus laws during the height of the pandemic in 2020 to provide relief to Filipinos and to help the economy rebound from the downturn induced by the health crisis.
Bayan Bangon Muli na bill, a stimulus package, that will allow the incoming president to harness the resources available to him during this closing period of 2022, and of course to harness whatever remaining resources to stimulate the economy and to reinvigorate it.
All right, lawmakers trying to get more and more creative there, Dan.
Okay, BBM. All right.
All right, that's a first look into the business day this Friday, May 20, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.